So I wanted to ask about your NIM. You said that it has improved slightly in the this quarter, but if you could help us provide a guidance, given that a lot of banks are expecting some pressure in NIMs going forward, given the rate cut cycle. So if you could provide us a guidance on that, then I'll ask my second question.
So the NIM for the quarter actually improved also because of two factors. One is that, as you know, we have cut the saving account rates, right? We used to have two slabs, 3 and 3.5%. Now we have reduced that to 2.75 and 3.25. So that's one of the reasons. Second, of course, our average current account balance was higher during the Q4. Coming to the NIM going forward, how we look at it, let me explain you. Basically, the NIM has two components, the earning assets yield. As we now come out of embargo and we start our credit card business and the personal loan, as Ashok shared, we are kind of quite comfortable. So the unsecured mix of the advances, as it starts improving with the comfort which we have, you will see some uptake in the yield, right? Of course, you have the the RBI repo rate cut always on the card, and we don't know when it will happen and how much it will happen. On the cost side, which is the other aspect of the NIM, we have already started reducing the saving account rate, right? So we already now 2.75. Other thing which we have, as you know, is the active money, where the maturities are much lesser. So the repricing is also much faster. So there also we are reducing the rate of interest, what we pay on the active money. And as we have seen, like other players have already started reducing the rate on the term deposit. And we also have sort of started rationalizing in the select time buckets which we have. So I think, yes, because of since the repo rate affects on a portfolio basis, there will be a temporary mismatch till the liability repricing happens. But I think given that our liability repricing period is much shorter, we expect to, navigate this repo rate cut and NIM corrections in a faster manner. But yes, for a short-term period going forward, there will be some pressure on the NIM. It's the same thing like when the repo rate went up, we got the advantage of it, right? So if you see the last quarter of 24, our NIM was as high as 5.32%, right? So when the repo rate goes down, I think the reverse holds good.
So my second question to Mr. Vaswani, you said that your corporate book and commercial banking book has grown, but on a year-on-year basis, when we see there has been some sort of slowdown from the previous quarter, and you're also saying that you're seeing monitoring the external environment. Are you going to see some impact on your transactional banking, corporate banking book?
Yeah, I said that the consumer and the commercial are growing. The corporate, because of the competitive pricing of the short term, and we sort of then move to the credit substitutes. As of now, the way we see growth in the external environment, we're not seeing any slowdown in the transaction banking businesses as yet. Yeah, as yet. And remains to be seen, largely it will be macros stabilizing. Inflation, as you know, is cooled off. We don't know about the geopolitical tension. So we don't expect that to happen. Yeah, not yet. We're not seeing any signs of it. As we look at our strategy on the asset side, like I said, consumer, which is the secured side, mortgages, business banking, credit cards, personal loans, remain core to our customer strategy. Our commercial vehicles, tractors, agri, and our SME businesses, all three SME businesses are core. Right? Even on the corporate side, the corporate SME is doing very well. In fact, it grew, significantly in this quarter and by 31%. So we're clear about where we are focused. On the wholesale side, transaction banking is very core to our customer. That will continue to grow.